Good afternoon, everybody. My name is Ian Campbell. I'm Vice President of Operations at PASIC, and I'm your moderator for today's webinar. This is the first of 3 Emerging Risks webinars that we're hosting this year. Today, our topic is a conversation with insurers regarding risk identification. We have 3 distinguished industry panelists joining us here today, and I'll introduce those parties in a moment. First, some housekeeping issues. We're filming on location in downtown Toronto. We're coming to you live from the offices of PASIC downtown. This is a functioning office, so if you hear phones ringing, doors opening, do bear with us as we go through the broadcast here. Our webinars give us a chance to drill deep into topical issues. These are issues of concern to risk management professionals in the industry. It's also an opportunity to connect interested parties across Canada, those unable to attend forum meetings regularly held here in Toronto. Interest in our webinar series is growing. This is our most popular broadcast to date. We have almost 60 organizations checking in with us today from across Canada, so welcome everybody. And a special welcome if this is your first time participating in one of our webinars. I'm proud to say we're the #1 talk show in the Canadian P&C insurance industry, targeting senior risk professionals and focused entirely on emerging risk issues. We happen also to be the only talk show in the Canadian P&C insurance industry targeting senior risk professionals and focused entirely on emerging risk issues. So I think we're untouchable. First, our lawyers are going to want to hear this. Antitrust Compliance, we honor and adhere to the Competition Act in all of our webinars and forum meetings. There's no collusion on approaches to business strategies. There's no discussion of claim adjusting practices, scopes of coverage, resolution of mixed claims, or management of third-party vendors and service providers, as per the Competition Act requirements. Our webinars are always recorded for future on-demand rebroadcast. You'll see a copy of that on the PASIC website shortly. And this will be of interest to members here not able to join us here today. Our guest speakers, we have tremendous interest in this topic. As I said, our largest number of registrants to date. These are people that are tuning in are very interested in the elements of an effective ERM strategy and program. It's appropriate that we begin the year with a webinar on risk identification. We are focusing on building blocks, and we will revisit this in future broadcasts as we delve through various ERM issues. I'm very excited about the panel we've assembled here today. These a panel of respected senior executives. They have very significant risk management experience, and each brings a different perspective on the industry. To my immediate right is Susan Meltzer, Vice President Risk at Aviva Canada Inc. To her right is Elaine Lajeunesse, Senior Vice President and Chief Risk Officer for TD Insurance. And finally on the end, Paul Field, President, CEO, and Chief Financial Officer, both the Reliable Insurance Company, Life Insurance Company, and Old Republic Insurance Company of Canada. I want to thank our registrants for submitting questions that will guide our discussion here today. You'll see that our show is structured largely on these questions. We didn't have to do too much foresight because your questions are very insightful and wide-ranging, and we'll attempt to answer those with our panelists here today. This is going to be a benefit to viewers on how to structure their ERM program. So to begin, I'm going to ask each panelist, could they comment about how they approach risk identification in their organization, and then we're going to delve into many questions received from our viewers and go through those in turn. I think we're over 20 questions, so we have about 90 minutes to fill, so we'll go down the list, and let's begin with Susan, talking about risk identification, how you go about approaching that in Aviva.
So at Aviva, we have a number of different ways that we come at risk identification. In one regard, we look at risks from the bottom up by identifying risks with the business and understanding the risks that they take in transacting their day-to-day business models. That is using a very generic set of common risks that the company has identified as the common risks that we take. In addition to that, we have a top-down view of the risks. And if you ask me what tool I use for that, I think I would tell you we use Post-it notes to write them up and then stick them on a banner afterwards. But I guess we don't use Post-it notes as much anymore as we use a computerized version of a Post-it note. But that's really the top-down view, taking a look more at the emerging and strategic risks that face the organization. Recently, we've added a tool to come more middle down, if you will, and do that same piece of identifying strategic and emerging risks from the executives and their direct reports, so a bit more in the middle. So those are the 3 key things that we're looking at Aviva.
Okay. Elaine?
It's not really different from what Suzanne is doing, but I will just take a different way of talking about it. Like the first tool that we have is we've identified key indicator that are guiding our thought process. And these ones come from various sources. It could be continuity, business continuity team, it could be human resources, so it's a wide range of different parts of the business. Then we have an operational risk framework that we're leveraging as well. And we do periodic review with the business of our risk. So obviously every month we look at our reports, we try to leverage things that are already built in the organization and just put a risk lens on it. And then, there's always the special projects where you get a different take. And for me, it always comes down to what's my business reason for doing this, and do I understand it, and try to apply common sense. So there's always a step that we try to take a step back and think, what does that mean in reality?
Okay, Paul.
We're small. So let me start with, we're small. So our approach is going to be a little different than what you necessarily would see from an Aviva or even at TD, because your risk managers is your management team. You don't have a lot of layers of management because you don't have a lot of employees to begin with. So your whole approach has to be a little different. And some of the risks that you face as a smaller organization are not necessarily the headline risks that we all read about, because they're not necessarily germane to your own business. Where we start, or where I start in terms of trying to identify what are the risks that the organization is facing, I will pull out the agendas for the last 12 months of our senior management meetings. And what are we talking about? And to me, if you start to see certain topics consistently showing up or certain topics being discussed, that's a signal to me that there's risk there that obviously we're trying to manage as a management team, and therefore that's a risk that we need to be looking at maybe more deeply to understand what it is, and are we managing it effectively? Because I think the one risk that organizations fall down on, we all have great plans, but it's in the execution of the plans that are going to decide your failure or your success. And do you have the right people and the right processes to actually achieve the plan that you set out? And what's the risk around that? And I think that's where that senior management agenda really helps. From a smaller company perspective, KPMG does a great thing, as do a lot of the other organizations, putting out booklets and discussing what's going on in the industry and various issues there. I think it's a great source in terms of identifying certain risks that may be germane to your business model. I actually follow a few individuals that I consider credible in terms of their blogs, because they will touch on issues and topics that I find will be germane to our business. And they can sometimes highlight issues that we have not necessarily thought about or we've considered, but maybe didn't appreciate how mainstream that might be. And maybe we need to give it a little bit more weight than what we have. And quite frankly, what are the headlines in the newspaper? And what does that mean to the business that you're doing today? And can you relate that? Are there risks there? I mean, if the newspapers are talking about it, then it's very real. And if it's not germane, fine. But if it is germane, is it on your list, and are you actually monitoring that?
Paul touched on something. We tried to build a panel that reflects both large and small organizations, so we certainly appreciate your opinion here today. That's all about risk identification tools that you use. Another question came in, and maybe I'll ask all our panelists here to answer in turn. Do you have any tips for implementing an emerging risk identification process? So a lot of your questions were about practicality and what can I do better? What should I be doing now, and what can I do better? So are there a couple of top tips you can give them for implementing an emerging risk identification process so nothing gets overlooked as you go through this? Who wants to?
I can go.
You want to go? Sure. All right.
I'll go. I think, I've done different size of organization, and the first thing is really to do your research. And it's a team sport as well. So for me, something like the Global Risk Institute was a really good source, but also the World Economic Forum every year publish a emerging risk and top risk survey. And then I just look at it from my perspective, does these apply or not? and read a lot. Like I'm with you, Paul. Like you have to read the newspaper. You cannot just go to your world and exclude everything. You have to read current events. You need to figure out the trend and what's impacting you and not. And and then the other thing is, also asking yourself, is that going to cause a terminal damage to my organization or not if something like this happens? I'll stop here to leave a bit of room.
I mean, I find if you go to frontline management and say, what risks are you facing? You may not get a very satisfactory answer. Mm-hmm. But I think if you go to frontline management and say, what issues are you combating today that's inhibiting your ability to be successful in what you're trying to achieve? And then just sit back and listen to what they say. You're going to hear risks emerging out of that discussion. They may not recognize it as risk, and that's where you have to be able to take that information and turn it into recognizing what that really truly is from a risk perspective. Because they only just see it as operational hurdles. But if listen carefully, you'll hear risk emerging.
I agree with you. Like asking what risk are you facing is never conducive to anything meaningful.
So I just want to pick up on something that Paul said, because we use the word risk a lot. Mm-hmm. Half the time, more than half the time, we don't even mean the word risk. We mean exposure or scenario or whatever. But I think it's really important tip to say that we've got this list of emerging risks. We've done the work, we've done the research, we've presented it. But we in the risk team or in the facilitators or whatever we're doing, we don't own those risks. So we come up with this lovely list of here's our emerging risks, here's how long we think they are. Each one of them has to be assigned, if you will, to somebody to work on, to monitor, to come up with action plans. We used to come up a number of years ago with a long list of emerging risks, and then we just every quarter looked at them and said, yep, they're still emerging risks. And now we're making sure that they're assigned, that someone outside the risk team is doing what they need to do. Some of them will still be monitored. I gave an example earlier today of a number of years ago we had inflation as an emerging risk, and a lot of people couldn't even spell the word inflation at the time. But we did a workshop on it. We pulled together our action plans should that ever happen. So somebody was still in charge of doing something about that risk. So I think that's an important piece of it.
And I think that the one thing that we also have to discuss is, at some point, emerging risks become accepted risk.
Yes.
And you also have to have that kind of process in place to think about not retiring, but some will become a risk that you accept as a business.
Yes.
It's so that you don't get a stale conversation, that your conversation is always current and on point. Because if you keep rehashing the same risk over and over, you're probably not going to get a lot of traction.
Agreed. Also, if you look at failed projects, we all have failed projects. Companies may not want to admit that. We all have failed projects. Why did it fail? And I think when you start to look through and the tea leaves and analyze it, you start to find out that there were risks there that you had not recognized that maybe now you need to look at, because if it failed this time, what's the next project that may fail because you don't take that into consideration?
Is there a time frame on, we touched on emerging risks. We do an annual ERM survey where we ask the industry what are emerging risks that people need to be mindful of over the next 3 years and then the next 3 to 10 years. And so there's different levels of risk there. And I'm starting to see now a lot of the same issues are appearing in the short term, like cyber, for example. So that's, everybody knows cyber is an issue. Does it have a long shelf life? Is it an issue for a couple of years and then it's off the table, you're on to something else? Or is this an issue that's kind of reinventing itself or posing new problems? Are there?
Well, I mean, Susan and I were talking earlier about cyber and also talking about the fact, and to her other point, at what point is it just an accepted business risk? Mm-hmm. Like cyber risk is out there. To me, cyber risk today is the buzzword. All the regulators want to talk about cyber risk because they think it's the panacea. They've discovered something that no one's dealing with. And the reality is we're all dealing with cyber risk. We all do our penetration testing. We're all doing, we've got our IT guys focused on this to try and build as strong a wall as possible. We've just all accepted today it's just a business risk that we have to manage. It's not an emerging risk. It's not overwhelming. It's no different than, quite frankly, succession planning and succession risk today. We're all dealing with the demographics and the issues of, where's tomorrow's employees coming from as the baby boomers retire? And what are we doing about that? To me, that's just as big a risk as cyber today.
I agree with you on most part of it, but I will disagree a little bit on cyber just because I think it's an evolving risk. I think it's transforming itself. What cyber risk was 3 years ago is different what cyber risk is now. But I don't think it's going to be a top risk forever either. But I think we're still discovering what cyber risk is actually.
Well, okay, so I'll qualify what I don't disagree. Cyber, it's not a destination. It's a journey,
Exactly.
right? It's going to constantly evolve. It's going to morph, and you're going to, my IT guys tell me we're just going to have to keep spending. We'll have to keep upgrading. We'll have to keep. It's because you're never going to get to the point that you're going to have perfect defenses.
Exactly.
But it's just a business
But it's
risk.
not emerging. It
No.
is a risk that's changing.
Maybe it's a top risk
It's a
now.
risk that's going to be forever amber because we're not going to catch up to the hackers. But it is just a risk on a list, as opposed to if you're an emerging risk, you can actually move around on that landscape of emerging. Like, to me, my best example of emerging risk is the last government gets in, last time minority government gets in, you start hearing people talk about auto insurance, and you start watching auto insurance move across the line, and it's emerging, and you're working on it as it goes, becomes more and more proximate, until finally you get to the end, and we know what the end is. But it's moved in its proximity. Cyber risk is moving upwards and becoming more impactful, but not moving in its probability because it's just highly probable.
Yep.
So
To me, it's more of a top risk than
it's
an
a top
emerging
risk.
risk.
Exactly.
Okay.
So that didn't really answer your question, but it was a good discussion.
The next one, you all check in at different levels in your organization, and so this is an interesting question from somebody out there. How and from whom do you get risk information in your organization? So for some of you, it's very granular, you're very hands-on, and for others, it may be filtered information you're receiving and then you're acting on. So we talked about the Global Risk Institute, the World Economic Forum. Those are good industry publications for annual takes on all the risks out there. What other sources, where else do you get your risk information?
I'll go first on this
Sure.
one. So I don't know how to answer this question because risk information to me is there's a lot of data sources like we were identifying earlier, but risk information to me is mostly around the conversation, and a lot of people in the business have information that become relevant to a risk that I'm looking at, but I couldn't categorize it into a specific type of information. So I could go to the actuarial team for information about the insurance risks that we're relating, or to the economic capital team for information on other risks. But I do find, and I work for a large company, so I have a lot of information. There's a lot of internal information that I can use that help me scope and understand the risks that I'm looking at. So I will first and foremost go inside the company to look for things. Outside of that, there's dozens of magazine sources, places to go. It's just really hard to categorize all those.
Okay, fair enough.
I'd say it's a case of trying to turn data into information.
Yeah.
Right. I mean, so it's what Susan's describing is you're amassing a lot of data. You're listening to people in terms of what they're saying. I think listening is a very fine art, and it's a skill in and of itself. But I think if you're looking for risk identification, listening is so very important. And then being able to take all the data that you've just heard and out of that glean what is the information content from that. And do you see patterns emerging through the various conversations? So, in a small organization, it could be simple things as having a conversation with the client service rep when she's not on a call in terms of what are the things that she's hearing over the phone today. And you just listen to that, and you might be surprised at some of the things you hear that you go back and start to think about and recognize that if you talk to a couple other CSRs, you start hearing the same thing, that there's a pattern, that there's a risk out there that maybe you were not aware of that's very different than what maybe you were thinking. I have the advantage that we're part of a larger organization, so I'm with my peers at various internal company functions. What are the issues they're dealing with? What are the problems they're trying to battle today? Is there something there I can bring back that's applicable to our operation here in Canada? They're all sources, but to me it comes back to you got to sit back and listen. Get out of the way.
Yeah, I agree. I think, like I mentioned earlier, I think risk management is a team sport. You can't,
Good phrase.
you cannot play it alone. So for me, like a key element of my role is to really build relationship with the first line and the second line and the third line. But also I encourage my team to do that. And one of my personal objectives for the next year is how do I get the right meaningful conversation? Because, asking directly for what the risk of that business is not working. It's not worked for since I was joined. So I've been experimenting every year on how I have these conversations. And I don't know how many conversations I've had with people, and then I come out of a meeting and a day later I hear something exploded. I'm thinking, did we not just have a conversation? Like, why did you think about mentioning this? Like, that's a big thing. But because we didn't have the right prompted question that really triggered a conversation. It's not because people want to hide things. It's just that sometimes it's almost, I always equate it to, if I talk to my mom every day, I'll know every single thing that happens. If I talk to her every month or every week, then I know what happened in the last couple of days. And not necessarily the whole picture. Yep. So of course, none of us are talking to our stakeholders every day necessarily because they're busy, we're busy. So how do we get the really important thing out in a meaningful conversation in a short time frame without filling them under pressure and then being an interrogatory? Like, I don't want to be with a list. I don't want to go to anyone with a list of questions and ask them my question because I'm fairly confident that what I didn't ask is what's going to happen.
In a smaller organization, management by walking about is a lot easier to do than in a large organization. So
Yes.
I can reflect on my days when I was with a large life insurance company, and you couldn't necessarily do management by walking about to find out what's going on. But in our organization, it's very easy for me to stroll the 2 floors for half an hour and just chit chat with some of the staff and hear the vibe and see what's going on, and you can learn a lot from that. You'll learn a lot from that. So if you're in a smaller organization, don't hide in your office because you're missing out on what's going on.
I think if you're a large organization, you shouldn't hide in your office either.
Well, true, but it becomes more challenging.
I'm just going to say I wish I had an office. So.
Me too, actually.
Another question came forward. What sources of information for scanning the horizon for future emerging risks do you use or do you recommend? And for everybody, it's all about trend spotting, trying to find the next big issue that's breaking. Oftentimes when you read it, it's not an emerging risk anymore. It's a known quantity. It's a risk you should be dealing with. But I guess one person's looking for what are the issues that are just about to break over the horizon? What should I be doing to spot these? What is it? Another jurisdiction that I should be looking at where these things break? Is it a publication that's trustworthy? Is there one go-to place from your experience?
I think if you've read about something in a number of the places that you read, and you get actually after you've got the same topic 2 or 3 times in 2 or 3 different magazines, you start to clue in, this is something I need to focus on. Or I get it through discussions with our senior management team or our board of directors, and it's a twig of something someone said that just puts your mind at thinking, I need to know more about this. It really is picking up through either reading or discussions. There's no one place I would go.
I think if any of us were really good at guessing what the future is, we would do something different with our life.
You're retired.
I'd probably retired. I'd probably get a better shows at picking my stocks. I think it is a bit of intuition, is a bit of experience, and that's why I'm a big believer that in order to be in risk management, you have to have experience. It's extremely difficult to do as a junior person.
Absolutely.
You need a breadth of experience so you can connect dots between. And if you're, there's not one recipe. Like none of us read minds. None of us can guess that. No one has a crystal ball that I know of that can tell them this is the next big thing. Sometimes it's just luck. All right, and I personally think it's experience and intuition, but.
So I was telling a story earlier today that we use wargaming to understand some of our emerging risks better. And the risk team designs the scenario. And early in 2013, we did a war game about what would happen if our customers and our employees were hit by the same disaster at the same time. And a few months later, we had the floods in Calgary.
Mhm.
And our employees and our customers were hit by the same time, totally coincidentally. So a lot of it seems coincidental, but it's also the way you think because you're a risk person and you're walking yourself through these things that could happen.
And the only other comment is, don't restrict yourself to insurance.
Yeah,
Look at what's happening in terms of Amazon.
good point.
How's Walmart competing against Amazon? Are there lessons that you can learn from that you can apply back, especially as a small organization when you're competing against larger players in the marketplace who have greater spend, have greater market impact, have greater ability in terms of brand? What can you learn from other industries that have gone through transformation? Even go back through history. I mean, I grew up at one point in the mutual fund industry when there was lots of small mutual fund companies. There's not that many today. Now they're either really big or they're small and boutique. What happened through that process? How did that evolve? How did that change? Are there things that you can learn from that? Are there things that you can learn from the days when we had a trust industry?
I think we've seen so much of this just with the people that registered here today that when I first started the ERM survey at PASIC a number of years ago, we had such a big gap between the large firms and the small firms in the industry in terms of best ERM practices out there. And there's been a tightening in the gap over time. So I don't think necessarily the argument holds as much as it used to, that it's only big organizations that can spot the trends. Is that probably a fair statement
I think
now?
it's fair. I think there's so many resources now. Like when I first started working, I'm not going to say how long ago, it was hard to get information out. Now with internet and the industry meetings and your own network, there's no reason to not be able to kind of understand.
There's a plethora of external data information today that did not exist 20 years ago, when ERM was really just kind of coming out of the woods, and you were really left to your own devices to try and figure out how to come up with risks and what were the risks. Today, there's so many sources that it's almost information overload.
Okay. Maybe I could throw that out there to our viewers out there. If there are questions they want to take sidebar to one of you, they could certainly have that conversation and give them their email addresses and patch you up there. Another person, they're trying to understand what's going on inside your organization. So in your organization, how does strategic planning and risk management work together on the identification of emerging risks? How effectively are these functions collaborating to support the strategic decisions of your organization? So they're asking you basically, is everything in sync with your risk management area and the strat plan of the organization? Is everybody working together, moving in sync? Where are we at with that?
More or less, I would say.
Okay.
More or less is probably the truth. I think there's steps that are done before, there's steps that are done after. Like my own personal dream is to do economic capital at the same time we're doing the strategic plan before it's approved. It's a work in progress.
Okay.
In our case, yes, I'd say it is integrated, but then I'm in the position where I can make sure that it gets integrated.
Right.
And I have a vested interest in trying to make sure it gets integrated. So our whole DCAP process and our budget and planning process and our strategic plan and our longer term projections and all the business plans and everything that goes on behind all it is all happening. It all culminates into one meeting at the board. So when they're looking at sort of our plan and where we think we're going to be, and they look at DCAT and it's based on our projection where we think it's going to be and what we're going to do, it's all integrated. So, and then the DCAT gets appropriately obviously stress tested in and of itself. But we run other scenarios outside of the scenarios that are required just to satisfy OSFI, so that the board gets comfort that what we're going after and what we're trying to achieve can be done. The single biggest risk that we spend the biggest time talking about is, as a small, do we have the capability to actually deliver on the plans that we've laid out? Or is there a gap there in terms of resources? Do we have the right staff? Do we have that's always the biggest issue for us. Especially if you're trying to grow outside of what you do, or even if you're just growing within the business model that you're in. can you get the resources necessary to support the plan? Because if you can't get the resources, the plan fails.
Okay. This is what you're going to say?
No.
No. Okay.
I think, you still, I don't think there's any plan that's going out right now that doesn't have a risk assessment attached to it.
Yeah.
So I think all of us are involved in that part of the thing. I personally wish for more, but it will get that. But there's definitely a risk lens attached to every. I would be surprised as any strategic plan doesn't have a risk lens.
Yeah. So we do a risk assessment of the strategic plan that goes with the plan to the executive and to the board.
Mm-hmm.
It's not working together as much as it is ensuring that we've helped ensure that everybody understands the risks in that plan.
Yeah.
Informed decision-making. If you chose to do that, here are the risks
Yeah,
associated.
exactly.
Full
And-
information.
And
on
it
the board.
stays within our risk, and whether or not it
Exactly.
stays within
There's
our risk
also-
appetite.
There's an assessment of, I sign off on the plan from a risk appetite
Yes.
perspective.
Yeah, we do that too.
Okay, fair enough. How do you use benchmark studies to identify risks?
We don't.
I don't,
We don't.
not really.
Nobody does. Okay.
Sorry.
Can't help you on that
That was
one.
easy.
Okay, I have another question. We talked earlier, prior to coming to air, about the use of postal codes for risk identification, and one of our folks out there said, what alternatives are there out there to properly reflect risk levels if the government limits the use of postal codes for risk identification in the future? What would you do if that should come to pass? But given that,
We talked about this, and and this is where I think small organizations are at risk. If you think of the large organizations out there and the data that they have just within their own files today, in terms of what they know about the policyholders who have bought auto, the policyholders who bought auto and home, the policyholders who've only bought home, and depending on how long they've been with them, the number of cars they've had, the number of different types of homes they have, how many kids they've got, what their age is, their driving history, make and model, value of the car, value of the home. That's all data that you have in your underwriting files today. Have nothing to do with postal codes. You throw that all into one great big database and then just let AI go at it to identify the trends and the links. And because you can also add all the claims history into that as well. You can start to come up with that if they happen to drive a blue Mercedes today, and they used to have a Beamer, and they started with a van way back when, the likelihood of them having an accident in the next year is X%, and the cost would be Y.
and not because they live in this area of town.
Not because they're
geographically.
just by profiling their customers in terms of the demographic aspects that they know and the things that they've done. Even down to, did they purchase by credit? Are they paying by credit card? Are they paying by equal monthly installments? All of the, did they pay by check versus, all those different elements. AI can allow you to analyze that data and come out with, I believe, some very interesting trends that would help you from an underwriting point of view, regardless of postal code. As a small organization, I haven't got a hope of trying to do that. I mean, I don't necessarily have a big enough database that would be statistically valid to be able to do it. I certainly don't have the internal resources capable of doing that kind of computing and analysis, let alone maintaining it over time, let alone then trying to figure out how to apply it to the business that I have. So as a smaller organization, I'm in trouble if the model changes radically from what it is today, because I don't necessarily have the tools or the ability to invest in those tools in order to replace what exists today.
Is that a real risk that the government would do that? Outlaw the use of postal codes? It makes total sense from an
Politically
insurance
speaking,
perspective.
I say it's definitely a risk. I don't think you can, I would not be dissuaded from it. I think there's enough political sway there that if it's going to get votes, it will happen.
For political reasons, it's typecasting people, right? If you live in this area of town, you are this sort of person.
Oh,
Is that-
But we have it anyway. Just get StatsCan data, right? I mean,
Yeah, but it is founded on some reality of the statistic.
Yes.
Like
Right.
it's not a gimmick. So I'm going to be careful with this, because this is something that gets into strategy of organization.
Right, and we don't want
But I would say that in my personal beliefs, is the company that have not already invested in AI and database and the right skill sets within the organization if they want to compete in auto, will have a harder time.
I agree.
Okay. So our
Small companies have to pick their battle.
Pick their battles. Okay, fair enough. So our first area, we looked at tools and risk identification sources. The second one, I'm just trying to roll up all the questions that we've received out there, and the second category, naturally, specific risks. So you had some very pointed questions. What risks or unintended consequences do you foresee as a result of cannabis legislation? So we've done this as an emerging risks webinar a number of months ago about the advent of cannabis legislation, permissive legislation in Canada. And we're going to revisit this in the fall at one of our forum meetings, an hour-long block on cannabis and what's happened in the year that has passed in terms of legislation, the effect on the industry. But what do you foresee as a result of cannabis legislation for your organizations? Is it the biggest non-issue we've ever seen, or is it
So I
early
just
stages?
looked at my panel members and said, please let me answer this question. And seeing as I just came out of a board meeting and I did our paper on cannabis to our board meeting, I don't think that there's as big an issue as everybody is saying that there is. I think it's about as exciting as Y2K and so far as looking at risks. Certainly we're insuring it in people's homes because that's what we do. If people have a grow up in their house, we're not going to insure the grow up in their house. We probably have an advantage in knowing for sure that someone has driven while they're imbibing cannabis, and at least we can not cover their injuries, although we have to cover the injuries of third parties. We've seen in a few of the states where cannabis is legal, Colorado in particular, an increased frequency of smaller accidents. So we expect to see an increase here, not to any great extent. There is opportunities now to insure cannabis production plants, which I understand, although I've never gone on one, never done a tour of one, are excellent property programs. I don't know any insurers right now who are standing and waving their hands wanting to provide product liability for cannabis manufacturers. I think that's still an area that's a little bit more frightening than the rest of it, although I don't think that there is a big liability exposure there. And we also looked at, do we care about if our employees are imbibing in legal cannabis at all? And we said that we've already got all the employee protocols that we need. So I don't think there are any significant risks. I think there's a large number of people who are still nervous about it, and who are generating risks by being nervous about it. And I don't think there's any real risk for the company.
Yeah, I would say at this point, there's more opinion than the fact.
Mm-hmm.
And until fact replaces opinion, it's going to be out there, but
So we had a whole bunch of people who grew up when they were illegally smoking cannabis, and some of them probably sit at the desk next to us today. So I think there is a lot of opinion, and there's a lot of people that we know that have smoked pot their whole lives. This isn't new. So I think everybody just needs to take a deep breath and not worry about it so much.
Once the stores open and it becomes more widespread, the use in the economy, it's something to revisit.
I think, but there's an assumption that it's going to become more widespread.
Right.
That's an assumption.
That's an assumption.
Yeah.
Who's to say it's not? It always was.
It didn't become that more widespread in Colorado and some of the other states. It was the people that smoked it illegally were now smoking it legally. So, you know what? It's not that big of a deal.
Okay.
Yeah, but I think for me, it's more the long-term vision of this. It's more, what are going to be, I don't think it's been well studied. So to your point about there's no facts. So maybe, people have been using it since the 70s or even earlier, but I don't think there's been a lot of study to link how the impact on your wealth and your health. And what are the long-term effects? So like tobacco, it took a very long time for us to kind of link tobacco to cancer and other disease. So that's what worries me about that. It's not like the car accident. So we'll see a spike, the pricing will correct it, we'll have a lag, but that's not really what keeps me up at night. The other part is, talking with younger people that see that as a more factual thing and may be more inclined to use it, is what's going to be the impact on workforce. And when I read studies that says it kills the brain cells or whatever. And to your point, maybe they're sitting next to me. But if it does become more mainstream, and how is that going to impact the talent and the quality of people that we can recruit in the industry? That's where I'm more than the business side of it, the insurance side of it.
Okay. Another question. What risks do you foresee from non-traditional disruptors? And the person gave Google, Amazon as examples here. We had a little talk about this beforehand. What risks do you see there for disruption in the industry?
I think it's a question whether you see them as a threat or you see them as a partner. Certainly, if you are not interested in getting into that area at all in terms of fintech and things of that nature, then yes, I think it is a threat. But I think like any threat, it'll take time to evolve before you can really see what it looks like. I mean, Amazon initially was never viewed as a threat. And it took time to evolve before the retailing industry suddenly realized that maybe it was a threat. Uber initially was never viewed as a threat.
Right.
It slowly evolved over time and became a threat, but only after they started losing business did they wake up and take notice. I would like to think that we've learned our lessons from those type of examples and recognize that maybe we don't wait until we start losing business to realize that it's a threat. But whether you choose, it's a question, do you fight or do you join? I think the market's evolving. I think for long-term success, organizations need to join. Or you just choose to be a niche, and that's not a niche you care to play in, and you accept that you're putting a certain fence around what you're capable of in terms of what you are capable of doing. So you put a fence around and say, but within this field, I'm going to be very successful. It's going to be a shrinking market potentially, but within that market, I'll be the dominant player. And I'll leave the fintech to others who have the resources and the time to develop it.
I think the insurance industry is protected by the regulation right now. So if there's a big change in regulation, that would be a totally game changer. But for me, I think that the fintech are going to chip at part of what we do, but not necessarily the insurance, because it's a heavy burden to have to, all the requirement that we have to meet, the capital, all the reporting. So I see the fintech as coming in and almost ancillary stuff around what we do, more than becoming an insurer. I think if Amazon had wanted to do it, it would already be done. For example, and that's just my personal opinion. It's not even reflective of my employers, but to me, I think there's more things they can grab and get more money faster than get into insurance, where it's very complicated, very just thinking about the pricing, how many variables do you use in pricing? So it's not a simple business, but there are parts of it that, if not careful, the fintech could get a big market share in it.
Yeah, I guess the only thing I would say is, we talked about fintech, we talked about AI. Amazon knows an awful lot about you,
Absolutely.
as does Google. And so
Yeah.
I would say in some ways they probably have a leg up on a lot of insurance companies in terms of that they could niche market insurance.
Yeah, but would they do it themselves, or would they strike a deal?
I think it all depends.
Yeah.
Susan, you were going to.
No, I'm not.
Susan would prefer to sit this one out.
Prefer not to discuss this.
Okay, fair. What risks do you foresee in continuing down the path of the current auto insurance product in Canada? Everybody loves auto insurance.
So I see opportunities, not just risks.
Okay.
Obviously, if you have a large percentage of your product is personal lines auto in Ontario, isn't currently the productive way of making money, given the rates. I'll say in Ontario and Alberta, but I keep Alberta in that mix as well. I do think that there will be changes, that the auto insurance products are going to be such that we can afford to offer them and make money at it. I think the big part of managing through auto insurance products in the coming years is to be the ones who are prepared to offer insurance for autonomous and non-autonomous vehicles, and accepting not that we need to focus on autonomous vehicles only, but being the ones that understand that there will be both, and getting prepared to offer coverage for both. We have to get through the glitch that we're in now. And the regulatory problems in Ontario and Alberta are difficult. Ontario is slightly better than it was a month or so ago. Alberta hopefully will be better after the elections come around. But the situations right now with rate setting are creating significant regulatory risk for companies that are selling auto insurance in those two provinces.
I'd add BC, given what's happening in BC.
Yeah.
Even though it's
all right.
government run,
You're right. Let's
But,
add BC.
I would say, to me, it's all about regulatory risk, and as long as
Yeah.
the politicians think they know better as to what we as individuals need in terms of insurance coverage, we're going to have a problem.
Is it going to get better sooner or later?
I don't think the politicians want to give it up. I think unless we're able to, as a population, convince the politicians that we know what coverage we want or don't want and what we can afford, and allow the insurance industry to respond with a multitude of different products in a much more open and competitive marketplace, you're not going to solve the problem.
We can't say bring back tort, can we?
You know,
They won't let us do that.
you can't solve the problem. Big Brother, I honestly believe Big Brother has to step out.
It's a
Agreed.
cottage industry too. There's abuse at so many different levels.
Yeah.
I was involved in a car accident and the person said, we're not going to report it. I was like, yes, we're reporting it. You really hit the wrong person there. But, at some point, that was not the case for this because I got, settled by my insurance company. But in prior life, there's somebody says, well, I went to get my car repaired. Is this an insurance claim? I said, why? Are you going to charge me a different price? Why is it the first question that a garage will ask me?
Yes.
And so I think that the product are not super designed to meet the client. Some of the product are, if you have to die or be injured, it's better to be in a car accident. That's kind of crazy to think about that way. But some of it is the whole economy around this that's thriving on having this notion that because the insurer pays, it's not coming from my pocket. But that's not true. It's coming from my pocket.
Yeah.
I mean, I'll give you a parallel example. We're in the travel insurance market. We were also in the U.S. market for a period of time. In Canada, you don't file the policy, you don't file the rates. It's basically open market. So you're competing against your competitors from a rate point of view, in terms of policy, in terms of coverage, in terms of claim servicing. In the U.S., you have to file the policy and get it approved. You have to file your rates and get it approved, and that takes time. And every time you want to make a change to the product, you got to do another filing, and that you're filing in every single state if you want to have a national program. At the end of the day, if you were to line up a U.S. product today in terms of travel insurance and a Canadian travel insurance product, other than differences because of medical coverage, they're basically the same. If you look at the rates, the U.S. rates are actually higher than the Canadian rates. So which system works?
Okay.
Yeah.
Another question. Fire, cyber, and regulation are significant risks already facing the industry. Although they're present and currently being dealt with, the quick evolving pace in each of these areas may qualify them as emerging risks. Do you share this perspective, and how are you addressing the uncertainty within each of these risks?
So, I wonder how fire got on that list.
Maybe the wildfire.
Wildfires, probably.
It's more climate, I would
So
think.
I would actually put flood on that list. I'd take fire. I'd call it wildfire, flood, maybe cyber, and regulation, because I really think that flood is a significant emerging risk for us in our insurance risk exposures. I mentioned Calgary and Toronto, but we've had floods in Windsor. We've had a significant number of floods, and I do think that the changes in the climate. It's not that the climate is changing in Canada, it's that it has already changed and that we're getting increased wildfires, we're getting increased floods. it's emerging rather quickly and moving rapidly towards becoming more frequent. And I do see that change in our environment as significantly changing our insurance risk. It's a difficult one to do an actuarial review of because it's something different every year. It's still catastrophic, but one year you have a wildfire, the next year you have floods. It's different catastrophes,
Right, on a
but
rotating
we're having
basis.
them all the time.
Right.
So I do see them as emerging risks. Regulation is an interesting one because I was saying earlier I have an interesting relationship with having a UK-based parent. Might be even more interesting once we're not part of Europe. We have
Beginning in April?
have a whole new set of regulations. So we have three levels of regulatory risk because we have the UK, we have the provinces, and we have the federal regulations. So the changes in regulatory risk are becoming much more of a burden on the company, primarily at the provincial level in Canada, because it's difficult to understand where they're going. We hear that they're changing their views on conduct and wanting to become more focused on the customer, but when I ask from where to what, they can't answer that question. I feel like they're not going to go where the UK regulator has gone, which is virtually they manage every inch of the company and everything's approved. I mean, they even get to approve senior management before they're allowed to get jobs. It's approved by the regulator. I don't feel that coming here. But I don't know where the provincial regulators are going. I know where the AMF has gone, but I don't think Fiscal or FISRA or whoever we have here is going to go in the same way. And I don't think Alberta's going to go in the same way. So I worry about this unknown that we're getting at the provincial level.
Well, I can certainly speak from the small company perspective. The regulatory burden, it becomes a bigger and bigger issue.
Good for you.
I spend more and more of my time on regulatory matters and or regulatory documentation and or whatever than I do trying to actually run the business.
That actually made our list, the ERM issues that our members had talked about in the annual survey, that it came out of nowhere. It's just, people are now.
And I bear a lot of it on purpose, just so the rest of my team can stay focused on running the business instead of worrying about the regulatory aspects of it. I also agree with Susan. I have no idea where the province is going right now. We have to collate a pant load of data. So, go talk to your finance people in terms of the annual CCIR questionnaire that's got to be filled out. It's a lot of data, very little information. I have no idea what they're doing with it because, quite frankly, if I had all that data, I couldn't figure out too much about what was going on in my business, and I know my data. They're asking all the wrong questions, quite frankly. But when you try and dialogue with them on that matter, you get a sense they're not listening. They're almost afraid that we're leading them down a certain garden path because we have a vested interest to take them in a certain direction, not recognizing that what we're really trying to do is get them the data that we and the information they really need so they can do their job effectively, which benefits all of us. Because, at the end of the day, compliance is not a competitive advantage. It's just the cost of doing business, and it's in our best interest as an industry to be as compliant and to work in partnership with our regulators. But sometimes it's difficult to get the regulator to understand that, we truly believe that. And it's not an adversarial relationship. We're quite happy to be in partnership.
Okay. Any other questions on
No,
that?
I think they did a good job. Like I would just disagree with the climate change items. I think it may not be the same event every year, but there is something every year. So therefore,
Yes.
you can just price for something every year. So to me, I focus less on the what, the more. If there's something every year, then it becomes easy because it's become predictable.
Yeah, I just don't know if it's something more and more every year is what I worry about. It's
Yeah.
the unpredictability of it.
Do you have enough data today to
Yeah.
actually be able to assess
So-
your actual exposure? Like, how much flood exposure do you really have?
So have I
versus
put
what you
aside
think
the
you
right
have?
amount of money for the cats? That's the
And
question.
for me, it's more about, what is the state of urbanization? Are we, who knew Fort McMurray had so many people living there? Like, so
So-
how do you measure your concentration? Do you check that for it? How are our consumer, our client, how are their way of doing business changing? To me, this is way more disruptive.
So, but I asked a simple question. My question is, what other cities in any part of a northern province don't have fire protection around them? So what could be Fort McMurray?
Mm-hmm.
And the answer I get is everyone. That's not the answer I want to hear, obviously. So that's the kind of question that I'm trying to understand on a 1 in 200 basis. What are my other exposures?
Or to your point on water, and I agree, I think flood. How many municipalities' infrastructure is older than 50 years?
Yeah. So flood is actually worse. If you look at the two floods in Windsor in the last year and a half, I worry about that a lot more than I worry about the wildfire.
Yeah. So when I started working in Quebec, like we had a big water damage issues, and it was some of it from flood. But I remember, and that was more than 20 years ago, I remember thinking, okay, so we need to look into water damage. What does that mean? So there's always going to be something. We're in this business because it's changing and evolving. Like, I think a lot of us would not be in this business if we like predictability and
It's true.
stable and boring.
It's true.
But to me, it's kind of a different flavor of the day. We have some of the tools to manage this. We have the thought process. I'm kind of happy this is happening personally because it makes us keep us on our toe and make sure we're current. But
My concern is that it increases faster than we're ready for it to increase.
Yeah.
That's my concern.
We talked about specific risk issues. Now we'll delve into processes, strategies, and approaches. How do you collect feedback from the board? And I think Elaine's response here is going to be a little bit different from other people. So Elaine, maybe you could lead on this. How do you collect feedback from your board?
well, we provide risk reporting to our board.
And you are on the board,
I'm on the board.
which is interesting. Yeah.
But I am not presenting, so everyone in my team is presented as a role. And so we present risk profiling, we bring critical matters, not unlike Suzanne here, we do have some deep dive from time to time. It's more about the dialogue and the discussion, less about what we present. We look for feedback, advice, and we look, obviously endorsement and approval, of course. We also have a self-assessment that we do. And we have different level of both. So we have a board of director for the legal entity, the insurance legal entity, but we also have the board at the top of the house for the bank, and that has also a risk committee there. And every year, our business leader are presenting their view of the risk. So it's not me presenting; it's the CEO of the insurance operation that will actually present how he sees the risk, and then there's a very fruitful conversation.
And how often is your board meeting every year?
So the insurance legal entity is 4 times a year. The board of the TD board, I don't know, but I think it's something almost every month.
Right. Okay.
So it's fairly common, it's very frequent, but I would know, I don't know for sure, because
Okay.
this is not a board that I don't attend that particular
Right.
board.
And for you, Paul, for your board, how often are you meeting? And
Well, we meet
very
quarterly.
hands-on?
Yeah, we're quarterly. With an Old Republic's philosophy is the CEO is the CRO. And they will not move off of that philosophy. They feel that the CEO can never abdicate his
You
responsibility
can't
for
afford
risk.
to not stay connected to the
You need
business.
to know what's going on in the business. You need to know the risks. Which, for those of you out there will know that that's at odds with OSFI's perspective of CRO separate from the CEO role. But for me, it's more of, my approach to the board is very much one of put it all out there, make sure they have absolutely everything they need to know on the basis that if OSFI were to walk into their office and want to talk to them one-on-one, they would be able to have an informed discussion with OSFI about what's going on in the organization and not feel that they were searching for answers. That's my goal for every board meeting. And because at the end of the day, because we're wholly owned, their single biggest risk is regulatory risk. So I need to make sure that they feel they have enough information to be able to answer the regulators' questions. So a lot of their probing is usually more around the businesses that we are conducting in terms of what they want to know what's going on in the marketplace. They want to understand what's going on with our competitors. They want to know what's the story behind the numbers. So when you're doing the financial presentation, it's not, the numbers is not as important. I mean, they're important obviously, but it's the story that the numbers tell that's more important to them. And that's what they're most interested in, and that's where the questions will come from. They're trying to understand the numbers and what they mean relative to what's going on in the marketplace.
Okay. Susan, how often is your board?
Our board meets 4 times a year.
Okay.
It has several committees. I told everybody when I got here that I spent 5.5 hours with our board risk committee
wow.
yesterday, so
It's a marathon.
you can understand how the feedback would come. So we have a very active board, both the non-executive and the executive directors. All of them are more than happy to give their commentary, questions on anything that's being presented to them.
Mm-hmm.
So there's risk information, obviously formal risk information going to the board risk committee, but to the audit committee, the investment committee, they're also getting risk information about their aspects of the company as well. So it's a very continuous feedback, which I'm sure is similar for TD as well. I think, because I'm also part of a European company, I know the difference between the way the UK boards are managed, and I've also participated in US boards. Canadian boards are special. They're much more engaged.
Yeah.
They're much more interactive with management. They don't overstep to try to manage the company, but they ask the right questions. And it's not like in the US or in Europe when there is in the US where they're far too hands-off, and in Europe where they're far too hands-on. I think our boards do a really good job at running our organizations.
I think they're helpful. Like at every company that I've been at, they ask the right question and probing question that make you think and challenge you in a
Yes.
good way.
One step removed from the business. It's,
Yeah.
Good. Okay. Should companies be performing vulnerability assessments, and how frequently should those be done?
Absolutely.
Absolutely. Yes.
Absolutely.
And how frequently?
Well, we do vulnerability scans on a quarterly basis,
Okay.
using an outside party, and then we have another outside party who annually does the penetration testing. And we respond to any of those weaknesses they identify. And you have to do that because the reality is if they find weaknesses, don't assume that that's the first time those weaknesses have been identified.
Right. It's better identify internally.
Right?
Than,
You already know, that means if the penetration testing found the weaknesses, someone else has probably already found those weaknesses. I mean, we actually operate on the theory that we probably have already been hacked. We just don't know it.
Mm-hmm.
And so, you can't afford not to do it because you don't want to be wide open. And it's not the panacea, but it's just one step as part of your overall cyber risk management.
Okay. Somebody asked, what advice would you give risk managers in identifying the root causes of a risk rather than confusing them with the symptoms of the risk? Are there questions one can ask when faced with this conundrum? So actually looking at the risk itself and not symptoms of the risk. Are there tips, tricks, things you've encountered in the past where...
Well, I think first of all is make no assumption. Because sometimes the biggest problem is that you start with the solution in hand or in your mind, and so everything gets a bias. The thing is be open-minded, in my opinion, and just...
Okay.
For me, it's about you ask why, you get the answer why, and you
Yes,
keep
another why.
asking why over and over again, right? Because the first answer is probably the symptom. And you say, if this risk is going to happen, well, why did it happen? Well, why did that happen? Why did that happen? So it's a lot about getting the root cause is not a simple philosophy. It's not easy to get. You just have to keep peeling back that onion to get down to the center to find out what really caused it. I love when you're looking at a loss event or a large loss. You say, well, it was an underwriter error. Okay, well, what did the underwriter err on? And you get an answer, and it's not a fruitful answer. You have to peel back that onion a number of times until you truly find
painful,
out what happened.
Yeah. Yeah, and there's also this technique where you can just, say something along the line where, what would it take for this to be true? And so what would have needed to happen but didn't
Yes.
in order for us to avoid that particular operational
Yes.
risk, for example? And so rather than focusing on that event, focusing on everything around it.
Okay. Does event tree analysis have a place in insurance risk assessments? And if so, are there some caveats to this risk identification tool?
We don't use it, so I'm going
We
to
don't,
pass.
we don't
look at
use
me.
it. None of us use it.
I have
uses
no
it.
idea what that means.
Okay.
Perfectly honest.
We will move on.
Yeah, but that
Yeah.
some of these things are I personally feel makes you feel good because you
Yeah.
like personally I lose more sleep about the things I can't measure than things that I can measure.
Yes.
And I find sometimes once you have something to measure it, people feel so much better. But really, they should feel a lot worse because there's everything that's going to come back to bite you is something you haven't measured.
Don't get lost in the trees.
Yeah.
Okay. How does responsibility for identification of emerging risks get split out between the business, the first line of defense, and risk management, the second line? How does that happen in your organization?
We do it together.
Okay.
So we do a lot of the background work to bring some ideas and to be ready to challenge the first line with our ideas. We probably have some more time to think about it in advance. But, so we're more prepared, I'll put that down, but really it's both of our responsibilities.
Okay. Shared responsibility, is that your case?
Yeah, I think it's a joint effort personally. But obviously, the frontline owns the risk and should be more closer to it. But they're also very busy, and that's not their day job. And our day job is to think about these things. So I agree with Suzanne. We come to the table a little bit more prepared. Again, it's one of those things you can't make assumption, and you can't once you put an idea out there, you need to really probe properly so that you can get other idea. Because if you do all the work, I think the richness of the conversation is lost.
So it's a shared responsibility all the way down the line.
But you also have to be ready so that if the first line says, no, that's not a risk, you have to be ready to convince them that it is as well. Because I've been in those situations with senior people in the organization, shutting down a conversation. So you really have to be ready to.
Yeah, so
Have
the
a
way that
conversation.
we do these conversations typically is we have two ways. One is bottom up and top down. But the bottom up is really my team going into different group and gathering information. And then they kind of summarize it, put it together, and after that we have a conversation with my peers and the senior leadership. The other way is, there's lots of very bright people who work for the bank. They've think about these things more than we do. And then we use what they're thinking and what the other business of our group think. And then we bring this down and somewhat we try to meet in the middle. And so trying to bring both perspective. And it makes it for very interesting conversation, especially when you start talking about likelihood and potential impact and what is the residual things. It's almost like you put 5 actors in a room, you get 5 different answers. Not quite, but it's. I find this conversation quite insightful, actually.
The only thing I think the only challenge I think you have is if you have staff going out there doing the initial research and the data gathering, and you need to do that, that they don't reflect their own biases as they start to summarize and pull that data together. That's a real, that is a danger that you got to watch out for.
And I think the other danger is because they don't have necessarily the breadth of experience that you have, they're not necessarily thinking outside the organization.
Yeah, they don't think outside the box.
And so it really is incumbent to senior management to make sure that they bring this outside perspective to the debate as well. Because something for some person may be the big deal, but when you put it with the materiality lens on it, maybe it is bigger, maybe it's smaller too.
Mm-hmm.
Elaine touched on this and Susan earlier in your remarks. Can you provide examples of top-down and bottom-up approaches that you currently use to identify emerging risks in your organization?
So top down would be, looking at the other business within TD,
Okay.
how they see their risk. We look at the external environment. We have key business metrics that we look at. We survey top executive from time to time. And we look at other insurers. Okay? I've been known to look at the financial statement of my competitor
Sure.
and see what do they identify as their top risk. And again, top and emerging. Like for me, the difference between top and emerging sometimes is get a bit blurry. And I look at outside source like the World Economic Forum. I research, and there's some blogs that I like to look at. Willis does a really good job of this, for example. And the bottom up is, we do a RCSA, we call it PRCSA. We have a risk event analysis. We do scenario analysis. We listen to the customer. You brought up ombudsman complaint. We have a service for care for. So we look at all
We
these
invite
things.
comments from customers.
Yeah,
front
comments
line.
go, yeah, exactly. And we have also and that's the benefit of working for a larger company. We also have a line that's called the 1B line, which is really the risk management in the business people, basically. They probably would not like me to tell them they're their risk management. But they're really the frontline people. That they manage their business continuity process, they manage their risk event. They're the first line to go and take care of the problems or help the business take care of the problem.
Okay.
So we have in the first line QA and control people who are the risk people in the business that would work on the RCSA. So they're in charge of the day-to-day risks of the business. So we wouldn't interfere as much of that. We go to look and say, do you have a strong control environment? Do you have them in place? And that's how the bottom up would come through that process. So we don't have a lot to do with that part of the bottom up. We would go in and test some of it to make sure we feel comfortable with the control environment. We're much more engaged with the top down piece, fairly similar to what you said, how we look at the top down, but mostly driven by discussion. So my team would get together quarterly, just the risk team, risk and compliance, talk about what they see as top down, what they've read about, what they know about, challenge what we have on the list, change things, put things together, add things, and then we take that to our ERMC, to our senior management risk committee, do the same thing and talk about it. Should some of these things come off? Is there new things that should come on? So it's largely driven by everyone's active knowledge of the world and discussion with everybody else.
Okay. What strategies do you use to stay ahead of non-traditional disruptive risks? So how do you stay ahead of the tidal wave? Are there any strategies, any tips? We talked earlier about trying to identify some of the disruptor that it's likely to affect your business in the next little while.
The one thing I will mention, it's been in the papers, everybody knows this, that we run what we call the digital garage, which is where we would look from a first line perspective at things that we could be doing that meet today's world, if I can put it that way. Places where the business could go that fits in with InsurTech, that does, things that fit more into the disrupted world, if I could call it that way. That's where we would look at most of the strategies. And they would look at the risks of them to turn the risks. I think all of the disruptor risks need to be turned into disruptor opportunities.
Okay.
And that's where they would look
Way to
at that.
them.
From a small company perspective, I would always start with know who you are, know what you are, know what you're good at doing. And then from that, if you're going to step out and compete with the disruptions, or if you want to get it, do you have the skill set capable?
Because some of you were saying people are just happy to be this, and not outside the box.
If you're comfortable in the box you're in and you're really good in the box you're in, how big a risk is it if you're not going to step outside of that box? And yes, there's all that disruption going on out there, and it may impact some of your business, and you need to assess what that means to you. But does that mean you have to confront it, or do you just say, I accept that, I know there's some loss of business, but I'm going to be really good at what I do? And I'll look at the retail world and you see the mom and pop shops that still exist today. You could walk to Walmart to get it, but you'll go to the mom and pop shop. Why? What is it they brought to the table that makes you want to go there as opposed to Walmart? There's lessons we can learn from that in terms of what we can do to still be really good at what we do while all that disruption is going on out there.
Okay.
I think you're right. My only concern with, Disruptor is like, I don't want to be Xerox. Like, I don't want to be.
I agree.
Yeah, no,
I don't
and
want
it's
to
a
be.
fair point.
I don't want to be Xerox that really
Or
was.
Blockbuster.
Blockbuster, these things. So,
Scrap
so I
heap of,
I think you need to study these guys. It's like what they say: keep your enemy closer than your
Yep.
friends.
Yes.
So I think you really need to make sure that you devote some time in studying the fintech and studying the disruptor to see, because they could, to your point, they could be an opportunity rather than a threat.
Agreed.
And but knowing who you are is very, very important, because you can lose your mind in the fintech world.
Yes.
If you really know who you are and what you're good at and then you can look at fintech to augment your skill set or to present it differently so you stay relevant. So for me, again, it's more like I don't want to be Xerox.
You got to be mindful of it. You can't ignore it.
Yeah, exactly.
You got to recognize, but
But you also can't be arrogant and thinking, well, because I have this characteristic and all of us are susceptible of doing this. I'm the top. Let's say I'm the top insurer, which I'm not today. That means I'm isolated. That doesn't mean that at all. I think these things can change over time. Like the top insurer when I started working is completely different than the company that's there today. And every 10 years, I think it's been a different insurer. We just have to be very careful and mindful and not becoming too arrogant and have blinders. That's my only concern.
Okay. This next set of questions we called observations. And so there's a good amount of experience represented here at the table. For each of the panel members, in your career, what emerging risk was the most difficult for you to get your organization to take seriously, and how did you do it?
You want me to
Let's
start?
take a stab.
sure.
I'll start.
What worked
My
what
problem
didn't?
is I have three. I have one from
Okay.
each of the three last companies I worked for.
Okay.
Okay. So when I was with Bell Canada, I was trying to tell them about this emerging risk of people leaving cable holes open. Sounds really exciting, doesn't it? But if you left the cable holes open in an office, in a telephone tower, that meant that if there was a fire on one floor, the
right.
smoke could go through the whole tower, and you could lose over $1 billion in equipment rather than $400 million.
Mhm.
So they didn't believe me.
Good point.
So I went to 3 buildings and I counted open cable holes.
Wow.
It was exhausting, but I won the bet. They were all open. When I was at Sun Life, it was Y2K. I told them that they were wasting millions of dollars fixing something that didn't need to be fixed. So this was the opposite. This was
Right.
They were worried about a risk that they shouldn't be
Getting
worried
off
about.
an issue. Yeah.
And then every time we took a risk report to somebody would say, why isn't Y2K on your risk report? And we would say, because we don't think it's a risk. So we waited till January 1st.
The second must have been a party for you.
And we had our party. At Aviva, that's a difficult question. Because you said something really interesting. It's such a fluid world we live in today. There are so many risks that come and go so quickly. So many that some people think are significant risks and we don't, or some that we do and they don't. And the day changes every day. So to pick one, I'm having a hard time finding the one at Aviva Canada.
Okay, that's
So-
fair.
I would not name companies. You're brave, but I would say that a few years ago, I put on my cyber risk, and I was spot on that one, and I still went through it. But that particular company thought that they didn't need to put it because they were a broker-based company. So why would they put it on? And we didn't have the client information, and so a lot of it has to do with how the information that's available to.
Yeah.
Another companies, I fought to get regulatory on it because said, well, it's really, we have time to see it coming. It's really not that big of a deal. It's still wet on the stuff. It grudgingly says, well, if the rest of the world is having, we'll have it. And so, sometimes you win these battles that way. So I think every business, you're always going to get some, and some of them you convince them by proving hard facts, but there's very few hard facts on emerging risk.
Yeah.
And some of them is just to say, well, there's an expectation from this, or our parents wants that. How can you justify it otherwise? So I'm not that I'm particularly good at convincing anyone, but so far I've won those battles. But they're really minor things though. If at the end of the day, if it's not on your list, it doesn't mean you're forgetting about it either.
Mm-hmm. I'll let the guilty party stay innocent. But when I read that question last night, I have to admit I had to sit back and think about it for a while and think of through my career, when have I faced obstacles? And it brought to mind one of my favorite books of about 2 decades ago called Teaching the Elephant to Dance. And it's all about how do you get the elephant to smell the smoke that'll actually get up and try and do something different. Because it starts with, you have the baby elephant learns that stake in the ground means he can't move. And even as an adult elephant, one jerk of the leg, he can pull the stake out, but he doesn't because he's been conditioned. So how do you change that behavior? How do you get him to smell the smoke? My experience when you confront that is at the end of the day, what you're confronting is a lot of opinion, not necessarily a lot of facts. And if you want to go in, so one, know your audience. If you know your audience is going to have an opinion on it, then you better be prepared to either refute it with fact or opinion is going to become fact. And so my experience is spend the time, get the facts. And the more facts that you can amass, especially if it's from third-party sources, and even more so if you can get it from third-party sources where the company actually paid for that consulting report or paid for that study or paid whatever. Go off to the marketing department, go off and say, do you have it yet? Did you? That gives you huge credibility to be able to turn those opinions around and accept that based on the facts. Yes, that is an issue, but you have to do your homework. Opinion versus opinion is not going to win in the room.
Yeah.
Okay. We've got another probably 5 minutes left, and so I've got 4 questions in 5 minutes, so let's get really busy here.
Oh, snappers.
What can we expect from digitalization, data analytics, and automation trends? Any observations here?
Well, I think we need to understand it. I think this is the biggest challenge right now. It's moving so fast. Don't know that we all have the capabilities and the skill set within our teams. I don't know that any of the insurance company have all the capability and skill sets today. It's very fast moving. Even how do we manage model that are doing AI?
And that's one of the trends in our ERM survey when we ask people risks you're worried about long term is automation, that it came from way down the list to in the top 3 in the next 10
so
years.
We'll have to adapt all our processes,
Okay.
I think.
Let's go to the next one. How do you normally report emerging risks to the executives and your board? Is it part of periodic risk status reports or part of an annual strategic planning discussion session?
We do a quarterly report that's meant to be a quarterly risk discussion.
Okay.
It looks like a report, but it's meant to be the foundation to discuss the emerging risks and a report.
We have one board meeting a year that's focused all about risk management.
Okay.
And we just do it all in that one meeting.
Start of the year, end of the year?
It tends to be near the end of the year because it ties in with our budgeting and strategic planning and DCAT and everything else. So it's all encompassing. That's where we do our policy reviews in terms of the annual investment policy gets reviewed and approved, the capital management policy, the reinsurance plans. It's all done in that one meeting.
Okay. Once emerging risks have been identified, what do you do with them? What's your strategy for advancing them for further research, product opportunities, etc.? Is there a process here?
Well, Well, I think Suzanne touched on this earlier today. It's you really, once you think this is something that is emerging or top for you, you need to have an owner, you need to have action items, you need to have a follow-up. And so,
Some of them might just be monitor them, so the Bank Act is one of my emerging risks. I'm not doing much about the Bank Act at this point in time, but I'm monitoring
Right.
what's going
We're
on
doing a
and
5-year
others,
review and that
we're
sort of
doing
thing.
something. So, yeah,
Okay. And finally, have any participants had recent experience with issues being queried in meetings with regulators?
not answering.
Very specific issue. So,
I'll just tell you that I can guarantee you, you have a meeting with the regulator, they're going to talk about cyber, and you better be prepared to talk about what you're doing about it.
So we just finished our regulatory supervision, and they're very open and honest. I enjoy meeting with them. They ask tough questions, they give tough responses. They're actually meeting with our board tomorrow, and I think that the relationship we have with the federal regulator is really worthwhile. I think the challenge is great.
Oh, I agree, it's a positive relationship, but I guarantee you, they're going to talk about cyber.
okay. So that's probably a good point to conclude our discussion now. I want to thank Susan, Elaine, and Paul for joining us here today, for providing insight, perspective on how they approach risks and risk identification in the industry. It's been a good session in that we probed you for questions. You give us some very, very pointed questions, very good questions, and you get to see them answered by people in the industry. So certainly encourage that for future, and thank you very much for those that submitted questions. A copy of this webinar is going to be posted on our website shortly under the Risk Officers Forum tab. Webinar participants today are going to be asked to complete a satisfaction survey. You'll get that tomorrow. Our feedback to that survey helps to enhance the quality of future broadcasts, and we invite your thoughts on future speakers and subject matter. So very important, and certainly appreciate your feedback there. Our next event is the Risk Officers Forum meeting. That's taking place on Wednesday, April 3rd. You're going to get the registration forms for that shortly. This is going to be a good session. Penny Lee, Senior Director of P&C Group with OSFI, is coming to update us on the status of current industry issues, and this is really good in that they do a fall risk management seminar, and this is kind of the 6-month report on how things are going before they come back in November. So do make sure you're part of that. We have an exciting agenda planned. I want to thank our friends at EventStream for technical support today with today's broadcast. This concludes today's webinar. We look forward to having you join us for future sessions. Thank you for tuning us in, and goodbye for now.